morning. It is Thursday, February 27th. Just for scheduling purposes, I'm going to tell you I'm off tomorrow. You will not get anything tomorrow. I am traveling tomorrow. I am in New Jersey Saturday and Sunday. I'm flying back Monday. Then I fly back on Tuesday. So you may have a show on Tuesday. But then Wednesday through the next week, I got some medical issues with my dad and stuff like that to take care of up in New Jersey. So more than likely, you're going to get sporadic things and not necessarily timely things. So be prepared. Make sure you have your tools available to you. If I am one of your tools, I appreciate that. I appreciate you listening to me. I appreciate you tuning in. But you may not have me. So make sure that you have your tools available. We found out yesterday with TrendSpider being down how important that tool is. My anxiety level yesterday was at a 10, an absolute freaking 10. And I told TrendSpider it was the best marketing strategy they could have because I'm never getting rid of this tool. I'm absolutely never getting rid of this tool. What are we going to go over? Steve Cress wrote a letter to all the Alpha Picks people about the Alpha Picks performance. Bear sentiment is knocking on the door. We got a correction deniers scan from TrendSpider, and I used it yesterday to find 5 or 6 really good stocks. General Motors surprised the market yesterday. I think it's got more gas in the tank. Pardon the pun. Top 10 beaten down tech stocks from Steve Cress. This is right in my wheelhouse, and I will give you 4 of them. 4 of them I will give you, including AppLovin, which is had a short report. Is this one going to bounce back? They're coming back with guns blazing, and we've seen what happened with other shorts like SMCI, with Zeta, with other ones that have had the short day. We talked about the 200-day. Guess what's at the 200-day? Freaking Bitcoin. I didn't know that Seeking Alpha has a cryptocurrency page that you can track all the cryptocurrency. We'll talk about Ross. Not Ross Perot, Ross Cameron from Warrior Trading. I had Nader from TrendSpider set up a specific scan when Ross put in, hey, here's how I look at the best trades that I've ever done. So I had him put it in. I will do it a later newsletter, just so you know, but we'll look at that actual slide that I sent over to Nader so that you can see that TrendSpider, you can do whatever you want with it. Snow killed it. Salesforce killed it. And NVDA killed it. We'll go over all of this. Some power companies that killed it. And for paid newsletter subscribers today, I just paid $9 for a dozen eggs. I will go over an egg play. 3 stocks for an egg play because of the high price of eggs. Is there opportunity there? They actually point out there are 3. So there are 3 good egg plays. I will also show you how to set up a personalized AI feed based on your portfolio or watch list. And we'll go over one stock that I found that is just got changed to a strong buy in the quant, and I think it has opportunity, and so does AI. So we'll go over that for the paid newsletter subscribers. Remember, I do a free newsletter every day, and then I've been doing about a 10 to 15 minute bonus episode for everybody who pays for the newsletter. You may say, well, how do I get to the newsletter? Well, go over to Linktree. The link is down below. Okay, Daily Stock Picks, substack.com. You get to this one. And boy, that was just an hour and a half yesterday for live. I was with NVIDIA earnings on Substack. So go get the newsletter. Again, if you want to support the podcast, you can do it by subscribing for the paid newsletter. I do try and provide bonus things for the paid subscribers, but I do ask, hey, if you just want to support me, that's the way you do it, through the paid newsletter. So also TrendSpider, and you can support me by getting Seeking Alpha. We'll go over all of this, but Seeking Alpha, the bundle, and if you want, just get premium, you get $30 off. The Linktree saves you so much money on everything. So go and check out the Linktree. Now let's talk about the Qs, because yesterday, ho-hum, we had a lot in the market. I will say the first thing on my note, as the Qs, and again, remember the Qs, if we go over to Seeking Alpha and we just type in QQQ, okay, what is QQQ made of? Go to the holdings. Well, it's Apple, NVIDIA, Microsoft, Amazon, Broadcom, Meta, Costco, Tesla, Netflix, Alphabet. Those are the top 10. Well, I'd say that, within the Qs, you can see All of those are the top 10. It's only 100 stocks. So that's 10% of the freaking ETF. Then you go over here and you look, and the Qs are hitting the 200-day. We talked about how the 200-day is support. Look at the past times it hit the 200-day. We saw it nicely bounce afterwards. Okay, you haven't seen it live under there for very long. Is this an opportunity to get in? Well, it's Thursday. Maybe. It might be. Look at the weekly. Okay, scale it back when you look at a chart. Scale it back. Is the market expensive? Absolutely. That MACD has not moved down to that oscillator. We haven't seen it move down. This trend line that was resistance, that should provide you support. Has it moved far enough down? Probably not. If we go over and we just look at market data, okay, I want to point out market data, and I want to go to year to date. The Dow is up 2%. The S&P is up 1.44. The NASDAQ is up 0.65. It's lagging, okay? The small caps, the mid caps, and the micro caps, they are all super underperforming. The SPY is the standard. The Dow is outperforming it. We looked at that. Remember, the Dow is only 30 stocks. It's DIA if you want the ETF. But when you look at that and you look at this and you say, okay, it's too expensive. Do I want to put money in? Put it in sparingly. It feels, and we'll talk about this in a little bit, it feels like we're at the bottom. But you know what's really the bottom? It's not the Qs. It's the Mag7. And some of these are screaming buys. I'm sorry, I've got a cough. Some of these are screaming buys on the 4-hour time frame. So let's just go over it. Google is a screaming buy on the 4-hour timeline. Do you want to wait for the 4-hour, or do you want to buy and hold for a potential long-term position? Well, I put that 171 in here as a potential level of support. How? Well, I went back to April of 2024, and I said that's where we started, saw the first breakout, and we saw it break down after that. Did we see it break down below that price level? Absolutely. But everything below that price level was a screaming buy even today. Even today. So you can wait for the 4-hour to find an entry, or you could start adding in today. It does look weak. The RSI is at 25. The MACD, well below the oscillator, 3 points below the oscillator. The last time it was 3 points below the oscillator, it was trading at 161. It got you in, and it filled the gap all the way up to 181 before it pulled back to 170 again. And you can see, if you buy it at 170, you should get back here to 193. Nothing is guaranteed. Because when you pull out on the weekly, does it look stretched still? It does. And we have broken down from that trend line that we saw. But if this is a goal of yours to get a position in Google, it's probably not a bad buy and hold or add to it. You know, Apple, would I be adding to Apple right now? Probably not. I think you're looking at 228 as a support. I would wait for it to get under that 200-day. Remember, that 200-day is screaming as a support level for most of these stocks. You can see Amazon got a little pop when it hit that 200-day. Is this one a buy? Probably not. I mean, right now on the weekly, it still looks stretched. And then you go and you look at Microsoft, Meta, all of these. If you can get Microsoft under $400, it's at $401 right now. I think that's screaming for a long-term buy. Is this a stronger company today with AI, with all of the spend that they're doing, with some of the additional products that they have, with some of their strategies, with their cloud business? Is it a stronger business than it was in January 2024, 1 year ago? I would say yes. It's trading at the same level it was January 2024. So those people that had bought and held it, they haven't done well. But look at this weekly. We just talked about the weekly on Google not looking, super, super weak. This one on Microsoft looks super, super weak. Has it come down enough? Probably not. I mean, the 200 days at 334. Could it come down there? Yes. But I think if your time frame is 5 to 10 years on Microsoft, and mine is, I'm fine buying here. I'm fine adding. Am I going balls deep? No, I'm just sticking the tip in. So let's talk about some of the performance stuff. AlphaPix has been underperforming. And Steve Cress wrote a letter to everybody who's an AlphaPix subscriber. Okay, much like seismic tremors before an earthquake, stocks with strong fundamentals often experience notable price weakness before periods of rising volatility. Fear is driving investor behavior. This is what you get with Alpha Picks. It is a top-down view of why the fear and greed index is at extreme fear. We go over all the time why, Warren Buffett says when other people are greedy, be fearful. When people are fearful, be greedy. We are at that level, extreme greed. Is it justified? Yes. We've got a president who wants to put tariffs and just use tariffs. We know all economists are saying tariffs are inflationary. Are they? The administration wants to tell us no, they aren't. We have an administration who wants to lay off hundreds of thousands of federal employees. The job market has been holding on by a thread. If you add hundreds of thousands of layoffs in the Washington, D.C. area, what does that do for the economy? We've got a Fed who doesn't want to raise rates, but hasn't been able to conquer inflation. So you've got a lot of things to be fearful about in this market. But do you want to go in? Yes. And Steve says it right here. Steve says, hey, during this time, this is the time to buy. So Warren Buffett, Steve Cress, both in the same league. Probably not, and Steve would kill me if he heard me say that. But the bear sentiment is here, and bear sentiment jumps, knocking on door, Great Recession. This is AAI. I forget the trade group's name, but it's a survey that they do, and I want to read one quote. The stock market has seen a recent stumble with S&P off 3% from its recent high, but it's still up 1.3% year to date. It doesn't feel like it, and we just went over that. The NASDAQ is off just 1.2%, and the Dow is off 2.1% for the year. Okay? The bond market may hold a small clue with pessimism. The 10-year yield has dropped, we went over this yesterday, has dropped from 4.8 to nearly 4.3. If we get to 3% on that 10-year, it's not a good thing. Given inflation expectations rising, the drop in rates look more pessimistic on growth. This could bring a U.S. recession fear back into the conversation. So you're hearing this. Do you want to go balls deep? No. It is a personal feeling and it's a personal choice. I am not your financial advisor. If I told you that I was 100% in the market right now, would that cause you to lose sleep at night? Maybe. And if it does, make sure you have an appropriate set, appropriate portfolio. You want to make sure your expectations are realistic. And I use TrendSpider for those types of expectations, okay? For some of my long-term stuff, I'll go to a monthly chart. If you're not looking at monthly charts, if you're not looking at weekly charts and saying, okay, I want to, my portfolio may need a little break, well, look at the Qs. The last time was 2022 when the MACD was this high and the RSI was this high. What happened in 2022? Well, we went from, we went down 40%. It was a different world. It was a completely different world back then. We were dealing with 11% inflation. We were dealing with the Fed having record rate increases. Today, we may be dealing with a recession. Am I changing my personal portfolio? No. Should you? That is up to you. And I put these fears out there not to make you scared. I listened to a podcast yesterday on The Compound with Josh Brown, and he was interviewing some woman, I forget her name, but she is part of Ritz Holt's management. And she says, I'm putting this out there not to make you fearful because I'm still confident in the market, but I'm putting that out there so that you have the information. That's it. And do I think we're coming back down? The next level of support, if you're looking at a monthly chart, the level of support would be the previous all-time high. And I think that would be, let me just put a horizontal line in here at the all-time high, right? The previous high, 404. That would mean 100 points from that is a significant pullback. Now, if you're not in your 60s, if you're not close to retirement, we talked this out about yesterday, that type of pullback, if you're close to retirement, would hurt. But would it hurt you at 20 years old if you bought here and waited another couple of years for it to come back? No. And that's what you want to look at. You want to pull out and look at longer term charts. The other thing for short term is maybe you want to look at some of these things. Correction deniers. And I ran this thing yesterday, and you can just go and look at correction deniers. I am subscribed right there. It's by TrendSpider, and it will pull up all of the current ones that you want to do. Okay, you can import this into your TrendSpider system. I will include it in the newsletter. You just log in and import, and you can scan for all of these stocks. And this is what it pulls up. Yum Brands, Lilly. I mean, look, there are this, if you use the 4-hour algorithm and you look at this, you can see these are all stocks that are up in a down market. Yum Brands, algorithm got you in at 126 on January 16th. Did you want to get in? Maybe. Eli Lilly. This is a core portfolio stock. Core 4-hour algorithm got you in at 764. You're trading at 914 right now. AGI, Almost Gold. 4-hour algorithm got you in January 7th at $18. Again, is there a trend here? Well, these are all correction deniers. Basically, in a down market, these are going up. Coupang Software, which just reported, algorithm got you in at 22. It's at 25 right now. There were a couple that I wrote down. Eli Lilly is one of them. Look at this stock. It is going to go back to all-time highs. And your all-time high is 966. It will go there. This is a GLP-1 market. We talk about it all the time. Another one that was in there yesterday is EGP. This is East Group Properties. This is a REIT. And you look at it, this is just had a golden cross on the 4-hour. Look at the 50-day crossing up on the 200-day. And you look at a weekly on this one. Is this one stretched? No. I mean, the 50-day is just playing around with the 200-day. And we're trading over it. Is it going to go back up here to 189? Maybe. But you can see it's got a higher price. And this is a REIT, so you're getting a good dividend. Rollins, ROL. We can talk about this one on the 4-hour. A 4-hour got you in December 30th. And you just had another golden cross. That's another one. It looks exactly the same. You can look at Abbott Labs. This one has been on a roll. All-time highs with the MACD divergence. So divergence is the price is going in that direction. It's going up. Algorithm got you in January 17th at 114. You're trading at 138. And your MACD has been going down since then. That's divergence. It's bullish. It's bullish. And if we pull up a weekly chart on this one, boy, the all-time high is 140. You could be going to all-time highs. So that's how you use these charts, these scanners, everything. My 4-hour algorithm is available to anybody that subscribes to TrendSpider. Go and try this out. What you can do is use my newsletter. Go and sign up for TrendSpider. Use my newsletter today, Correction Deniers. Import that. It's $20. Use the scan today and go and get it. Again, go and get it. Try it out. If your charting platform can't scan for things like this, it's not worth it, and it better be free. The free ones don't do this. The paid ones just take the training wheels off and you go balls deep and you can do it. Now, one thing that I found interesting yesterday is General Motors. So, full disclosure, this is an Alpha Pick stock. I own it through Alpha Pick. Okay, I don't trade this one. I don't like GM. Their business structure for me just isn't one that's interesting to me. But they're buying back so much stock. It's down 1.42% at 47. But if you look at this chart and we go and look at it, I like this chart sitting here. So we saw it pop back up to the 50-day. We had this death cross on the 4-hour. You're trading well below the oscillator. Your RSI is in no man's land at 55. And you look at this weekly chart, okay? We're seeing that old resistance show up at about 50. Now, if you're going to buy this one, it's at 47, 48 right now. It's a 5% move up to 50. I would probably wait to see if you come down to 45 today. Yesterday's news was big. They're buying back a ton of stock and they're retiring a ton of stock. I think that's what they're doing to manipulate the price. And GM right now is running things better. You know, do tariffs hurt GM? Yeah. I think they're going to do things better than Ford. And Ford, the only reason Ford's going to bounce is because it's so oversold. But I think GM is one that you could take a look at from a car company standpoint. Auto manufacturers right now, XPEV and the Chinese are right there. Mercedes-Benz Group, they're all right above it. You know, you can take a look at Tesla. That hasn't done well in the quant, and it's because of the valuation. Now, when you look at General Motors, it makes sense that the valuation is a C+. Their growth sucks, but they're buying back and retiring so much stock. And that's what you want to look at. Now, this was right up my alley. Steve Cress wrote yesterday, 10 beaten down tech stocks for 2025. I'm going to show you 4. And we're not going to go, you can go in and look at these in Seeking Alpha to see how they're good. But the first one is CRDO. This is a top 2025 stock. In fact, it was the top 2025 pick by Steve Cress on January 15th, which we saw. That was at 77. You're getting this one at 61. He goes over in this article. Read the article about CRDO. He goes over why it's still a good play. Did this one get a pop with NVDA? Yeah, it's up 4% today. You're using the 200-day on that 4-hour time frame. If you go and look at it just a daily, again, a daily is going to react slower than the 4-hour. But at the very bottom of this would be 43 if you come back down there. But this has played ever since this got kind of, the 50-day started moving, which was May of 2024. You've used the 50-day as the buying under and sell over on the daily. Okay, the MACD is well below the oscillator. The RSI is coming over oversold at 34, and they have their earnings coming up on March 4th next week. So it's a beaten down stock that you can take advantage of. CLS, Celestica, another top 10 and alpha pick. CLS has been beaten down. Steve goes over why it's a buy. Now, the 4-hour algorithm makes you 400% versus 735% buy and hold. If this one's run up too much, wait for the 4-hour algorithm to find you an entry. It will. The MACD is well low enough. When you look at a weekly on this one, it still hasn't come down far enough. Okay, wait for the 4-hour. I think you could get it at a better price. I added last week on this one. Okta is one. Okay, Okta is one that is trading. Here's the 200-day. It just got over the 200-day. Okay, they have earnings coming up on March 3rd. What happened on the earnings last time? Well, it was trading around 81. It popped all the way to 91. So maybe this is going to continue that move upward. You take a look at a weekly and you're not quite at the 200-day. You could get to that 117 level if it continues to move upward. If that 50-day starts to move up, if their earnings are good, it's a beaten down stock. This is an alpha pick. And one that he goes over is AppLovin. Okay, the AppLovin, this had a short report yesterday. It was down 12% again. Steve goes over why it's a buy on a dip. The AppLovin CEO said short reports published Wednesday are littered with inaccuracies and false assertions. It's disappointing that a few nefarious short sellers are making false and misleading claims aimed at undermining our success and driving down our stock price for their own financial gain, rather than acknowledge the sophisticated AI models our team has built to enhance advertising for our partners. AppLovin is a strong buy. When you get to a point that they just had, this is a stock, when you look at it, it's on a straight up trajectory. Now the Bollinger Bands, they just expanded incredibly. This stock traded to $519 last week, $525 the week before. It is extended. When you go and run the 4-hour algorithm, it makes you 1,756% versus 1,970%. I am perfectly willing to make 1,756% and give up the extra 200% for the safety of when to buy and when to sell. You win 72% of the time. Now, mind you, that is because we've been in a straight up trajectory. But over 24 months, there's 18 positions. So you're not even trading once a month. Wait for the 4-hour. When the 4-hour gets you back in, or you could get back in right now. The RSI is at 31. Okay, this one has come back down to where you've traded on the previous, or not the last earnings, which was just, let's see, February 12th, where they gave an astounding beat. But it's coming back to the gap up from November 6th. Okay, is it going to get down to 235? I don't think so. Could it get down below 300? Yes. But add a share. If you want this stock, add a share. You know, make a plan, make a strategy, and do what feels comfortable for you. Steve is going to tell you, hey, these are the 10 best. He doesn't know, just like I don't know if these are going to gain. Are the fundamentals of this one, it's a strong buy in the quant. Okay? You can see Wall Street has chased the price target up, $504. That's a 52% gain. Are they going to start coming down? Probably not. Now, if you don't want this one, you know who's competing with them? Unity Software. They just announced that, hey, we have a new software program that's going to compete with AppLovin. Has their stock done anything like this? No. They've got a new CFO and some new C-suite management. But Unity Software is going to be competing with AppLovin. And boy, TrendSpider's a little slow pulling up Unity Software. But we can look at it. Where does Wall Street think that it's a buy? 27. It's trading at 26. This was up 3% yesterday. It's up 1% in pre-market. Now, when we go and look at it, let me just go. I'm going to re-log in real quick. I think I didn't. There we go. Let's go to the 4-hour, and we'll pull up Unity Software. This is what's called I think they call it the noisy neighbor. But look at this one, Unity Software. The 200-day on the 4-hour just started to turn positive. Okay, the 50-day is coming. It had a death cross here and then had a golden cross. You're trading above that gap. There is a gap to 24. Could you come down to 24? Absolutely. But if you're looking at a long-term one, this one has been in a downward trend. But we're starting upward, and they gave positive guidance on their last earnings call. Now, the 4-hour algorithm completely outperforms buy and hold. Buy and hold over the last 24 months, you've lost 34%. The 4-hour algorithm gets you in 33 different times. Okay? 23% gain. Completely outperforms. Now, the reason is because you have huge runs like this one, where it bought in at 20 and it got you out up here with a 23% gain. Huge runs. But if you believe that this one's turning around, you can go and research it. Go and ask AI about it. Now, what's going to turn around? Bitcoin and crypto. Bitcoin's down another 1.57%. It's at 86,000. It's under 90,000. Bitcoin slides further as hopes for a crypto-friendly Trump administration dwindle. It takes months to do this stuff. And so, do I think that IBIT is a buy right now? I think you wait for the 4-hour algorithm to find you an entry in. It got you out. Am I adding while the 4-hour algorithm is out? No. I'm not. I will miss the big pop that comes back. Okay? But you've broken this trend. Am I adding more? No. Am I selling it? No. I have gains in this one because I think I started adding around $40. So I've got some gains. It's up 1.94% today, but it still doesn't show some positivity. Okay, Bitcoin falls to a new 3-month low and crosses below its 200-day. We just talked about how important the 200-day is. And we can pull up Bitcoin. I give you, when you sign up for TrendSpider, a Bitcoin and crypto list. Okay, it's impossible to keep this damn thing updated, but the 4-hour algorithm, okay, over the last 5 months, because remember, 4 hours, this trades 24 hours a day. So the 4-hour algorithm makes you 34% versus buy and hold makes you 48% over the last 5 months. I'll take 34 or 48%. I'll take either one. And so wait for the 4-hour algorithm to get you back in. And if you want to buy Bitcoin. It trades 24/7. It's probably a little bit safer. I'm looking at long term. I'm looking at this one in my retirement account. So I'm going to buy IBIT. There are probably ways to buy it, other ways, Bitcoin directly in your retirement account. But I'm going to buy IBIT. Okay, and Seeking Alpha has a full page. I didn't know this. You go to market data, you can look at all of these cryptos. Okay, all of these cryptos. You can look at year to date. What's the one that that's up the most? Litecoin. Monero is up 10%. Whitebit, Ripple. I mean, we can look at the 1 year gain, and it's market move. Move is the symbol. That's up 11,745,669%. And it's trading for 46 cents. Pepe Coin is up 359%. Ripple is up 298%. Whitebit is up 264%. Dogecoin is up 127%. You have to go way down here to Bitcoin, which is up 54% over 1 year. Okay. And then you get to the biggest losers. Tether, which is down 0.11. This is supposed to be a stable coin. It's down. It still moves. So cryptocurrency, I like that particular page. Now, let's talk about Ross. Ross, this is the education. This is a profile of his biggest winners, the profile of a winning stock. I took this screenshot and I sent it to Nader and I said, hey, can you build this? And he built it. I haven't back tested it, so I will include it probably later on, but we have a strategy. We're just going to try and trim it down. But Ross Cameron trades on 1 minute candles. I don't want you to trade on 1 minute candles. I want you to trade on longer term candles. So we're going to use this kind of thing to build a strategy in TrendSpider. And so what Ross is going over, if there's high demand and low supply in a stock, that's the first thing. You have to look at the fundamentals. And then he says 5 times relative volume. Okay. Already up 30% on the day. There's a new news event moving the stock higher and priced between $3 and $20. Less than 5 million shares available to trade. That's his target. And so he trades momentum on these small cap penny stock names, and he can make a living doing it. Remember, his performance is not typical at all, but that's how you use TrendSpider. So we built that one for you, and we'll have that for you a little bit later. Snowflake earnings. Snowflake killed it. They're up 13% in pre-market. They surpassed Wall Street's expectations. You can read all about it. There will be a bunch of upgrades for Snowflake. Snowflake is expensive. It's expensive. Just understand they're still not making money, but they have new management. They're turning it around. The valuation is still crazy. 202 for 156 PE. It's still not cash flow positive. Their growth, fantastic. Their profitability, they're doing great. They're growing. Their momentum, that's doing fantastic. Oh, except if you invested 1 year ago. And so I've said this before, and I'll say it again. My strategy for Snowflake, it may not be yours, is this weekly channel. And I just drew this weekly channel, and as I get up there to the top, I sell. So I did sell at about where it's trading right now, at about 188. I sold around there. Okay, I got out. I didn't want to wait until it got outside of this. This last time I thought it was going to do. And then what happened? Earnings disappointed. And all of a sudden I had to sell, instead of at 200, I had to sell at 180. So I sold at 180. But I started buying back right at about 156, 157. And I bought this entire way down. And so when I sold right before earnings, I didn't want to get caught in earnings again. So that's where I'm looking at today, is I'm looking to probably buy it closer to 150. That's my strategy. If it doesn't get back down there, I have to change my strategy. But that's my strategy. So Snowflake, just understand it's expensive. Go and read the AI report. This is going to be redone. This was last done on the 18th. Okay, they tell you who the competitors are. Amazon Web Services, Microsoft Azure, Google Cloud. I own all 3 of those stocks. All 3 of those. So do I need to own Snowflake? No. Do I want to own Snowflake? Yes, but I want to trade Snowflake. And so that's my strategy. Find a strategy. Salesforce, live yesterday, I said if there was one stock that I was going to buy, it was going to be Salesforce. Because I thought that Benioff, who was touting Agentforce with different companies, I thought they were going to blow it out of the water with Agentforce subscriptions. They did. But the market didn't like it. The market took it down. Look at the after hours on this one. If we go 5-minute after hours, The market took it down. This candle goes right down to 275. I said yesterday, if you can get this below 290, that's where you want to buy it. Right now, it's trading at 299. If you can get this below $300, I think that's a buy. Why? Take a look at a weekly on this one. Okay? That $300 just seems to be a resistance level, but make no bones about it. That will turn into support at some point in time. Salesforce is expensive. It's just like Snowflake. It's expensive. When you go and you look at the valuation, it's an F, 27 times forward earnings. Their growth, fantastic. Profitability, their margins are enormous. Their momentum, short term, they just haven't done much. Again, it hits this 300 mark. Where does Wall Street think it's worth? They think it's worth 386, the 25% upside. At some point in time, this one starts to go up there. And I just believe in Benioff, believe in leaders. That's it. So this earnings, this is a reason for me to start adding more. And I will add more. When? When the 4-hour algorithm tells me to. That's where I want to buy. It got me out here before there. And the 4-hour algorithm makes half the money that buying and holding does, but I do want to find a good entry. And so the 4-hour algorithm wins 42% of the time. That's close enough to 50 for me. In a stock that I believe in long-term, I'm fine waiting. So that's my strategy there. NVIDIA, it was perfectly fine. They didn't disappoint. There was nothing. If you can get this, and I said this yesterday live on the air, if you can get this under 130, get it under 130. Just understand that for the time being, and probably until their next earnings, the resistance is going to be 140. You could trade it all day between 130 and 140. Until 140 becomes support, it is resistance. And so if you just wait until it gets close to 140 and sell it, you could do it. Do I suggest you do that with your entire lot? No. One strategy that I've taken in the past with stocks like this is I will buy at 130 and then I will sell 10% of whatever I hold when it gets to 140. Okay? And when it gets above 140, I'll sell another 10%. And then when it gets back under 140, if it's at 139, I'll sell another 10%. That's 30%. And then I'll wait for it to get weak and get back down to 130, and I'll start adding 10% at each time. And that's a way for short term. Again, I don't like to do that in my brokerage account because those are tax events with short term capital gains. I do that in my retirement account. But it's a strategy. Find one that makes sense to you. And NVIDIA is what it is. Blackwell is going to lead an actual data center renewal. And I think Wall Street has it right. The street doesn't have it right, but Wall Street analysts have it right. This should be higher. But what they're afraid of is the delay in Blackwell and the Blackwell Plus stuff that they said they're going to start rolling out later this year. They believe there will be delays in that. And then you get into are we going to get into an AI recession where the hyperscalers won't spend? Because now that we have this out of the way, what's the next catalyst? Personally, I think it's next week, the job market data, where you get the February unemployment report or the jobs report with potential government layoffs. So if the job market weakens, look out below. The Fed may have to start cutting, but they haven't defeated inflation yet. And then you have tariffs. So if inflation comes back, all of a sudden you have what's called stagflation. And that's creeping back into the lexicon of the market. So now that we have this out of the way, again, that was the big earnings that we had. Let's go to Earnings Hub and show you. That was it. Oh, one other one that reported this morning, Vistra. Vistra reported. This was the big winner last year, Power. Vistra report, and they blew it away. They're up 5%. They were up 7% yesterday. This was a clear buy the dip situation. And Vistra, VST is the symbol. This was a buy the dip situation. Do you want to get into it? Well, the 4-hour algorithm is probably going to get you in. Does it make sense? On the weekly, you're still stretched. But they just had good earnings. So find a strategy, play it. Now, what do I like? If we go and look at Vistra here in the quant, and this is how you use Seeking Alpha. Well, it's a utility, but it's ranked number 2. What's number 1? TLN. Guess who reports after the bell today? Here's the earnings preview. We can see it. Is scheduled to announce Q4 earnings. The consensus is minus 20 cents. The consensus revenue is 439. That's minus 17% year over year. It's reduced. Okay. They have reduced their expectation, which sometimes points to, hey, if this one's beaten down, maybe we get back there. It is a new stock. We don't have moving averages. Typically, I do not want to trade something like this. The RSI is at 56. We don't even have a MACD on the weekly. We don't have a lot of this stuff. 4-hour algorithm, it had you in here at 225. It got you out. Does it have you in right now? No. And we're going to gap up because of the Vistra stuff. But the MACD is super low. I like TLN. In fact, I put TLN in the portfolio that I bought in January, and it's down on Savvy Trader. For paid newsletter subscribers, you can go look at it. It's down. But this one reports. And what else reports? We've got Rocket Labs. Rocket Labs is expected to lose 7 cents. They lost 10 cents last time. That's increased expectations. Dell is expected to report $2.51 in earnings. We know the PC market is weak. Is the data center going to take that over? Is the data center going to? We know that they built out the Colossus or something. That's the Elon supercomputer thing in Memphis. $24.53 billion in revenue. That's a reduction. So while the earnings per share goes up, the revenue actually goes down. Again, weak PCs. What's going to take it over? We have SoundHound. Remember, NVDA got out of this one. They sold their shares. Expected to lose 8 cents a share. Last time they lost 4 cents a share. Again, these are going to move. Duolingo. They made 49 cents a share. It's kind of right in line. But I don't use Duolingo. I don't understand Duolingo. But Transmedics, which is another shy one, they're expected to make 15 cents. Monster Energy, Archer, HPQ, SMR, which is the nuclear stuff. Again, find what you're comfortable with. Find a strategy to trade it. So for paid members, again, if you go over and you go over to Linktree and just the Daily Stock Pick newsletter, I'm going to have 3 egg plays. If you've paid like $9, $12 for a dozen eggs, you know what I'm talking about. What are 3 stocks that we could use to maybe make some money on those? I'll look at those 3. A way to personalize AI so that you get a morning email every morning based on your portfolio and any news that came up. And a stock that just turned to strong buy in the quant. So again, if you want TrendSpider, those emerging leaders or whatever, $20, go and play with it. Sign up for the newsletter. Get the scan to import. Try it out. Again, you'll get for $20. You can sign up for a training with TrendSpider, and they'll give you an hour training on that premium. If you want that one. But this is a tool that I can't live without. And then for Seeking Alpha, I suggest the bundle. Even though Alpha Picks is underperforming, Steve says it super well. He has managed a quant hedge fund that was bought out. And so this guy knows his stuff. He has outperformed the S&P. Go and look at it. Go and look at the deals that you can get because, again, you save $159. And where do you get all this? It's on Linktree, linktr.ee/daily stock pick. If you're watching the video, the link is literally down below. And you can save $20 off your mobile bill. If you're ordering a Tesla, you can save $2,000 there. Webull, you get 40 free stocks when you sign up for Webull. Okay, AT&T, refer a friend. Any of the stuff, it's all over there. Okay, that's it. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart